The stock market had a rip-roaring rally to start the week. We'll see what's going on now with Joe Tigay of Equity Armor Investments. Joe, unbelievably, the S&P closed above 4,300 this week, still staying around 4,200 here. What's your take on the market action?
Yeah, it tells me we had a tremendous run off of lows, over 17% rally from the low to the recent relative high. So the market certainly recovered. And the question is, is this just the dead cat bounce? Is this just a bear market rally, which we know can be significant and quick? Or is the market really going to fully recover and go on and take on new all-time highs? So that's still been the game, even though there's lots of reasons for optimism. Of course, we took over that 50% retracement from a low to high, which historically has been a tremendous sign for bulls that the bear market is over. However, the flip side of this is a lot of this rally was on interest rates. The interest rates story is kind of turning around. People are looking again at inflation, giving it a second look and saying the Fed might need to be a little more careful than we initially thought. That even though inflation's coming in, even though inflation might have peaked, there's a big difference between peaking at 9 and actually getting inflation down to 2%, where it needs to be for the Fed to be comfortable.
Retail numbers came in unchanged. The economists were expecting a tick up of 0.1%. We've also heard from the biggies such as Walmart and Home Depot and Target. What do you think about retailers?
Yeah, it's been kind of a mixed bag. Interesting, Target reaffirming their guidance at least. So it really is going to be a prove it quarter for the fourth quarter, third and fourth quarter. It's always a critical time of year. It's always a really significant time for S&P 500 companies with that fourth quarter. And it should be a volatile time, whether or not they're going to hit these earnings or not. There's high expectations. Prices have come all the way back, which means PEs are a lot higher than they were 2 months ago. So that expectation, companies need to hit these earnings, or else we're going to see some volatility, which is not uncommon in September and October.
That's a great reminder, Joe. A number of traders are bracing for the potentially wild months of September and October. Thank you so much.
Thanks for having me.
Go to businessfirstam.com for where to see our show on TV.